let's understand what an accounting equation is and how journal entries affect this equation. Accounting equation is an important concept in accounting as it is the foundation of double entry accounting. It represents the relationship between assets, liabilities and capital of a business. For the balance sheet of any business to tally, it is important that this equation remains in equilibrium for all transactions recorded in the books. The accounting equation is assets is equal to liabilities plus capital. Whenever a transaction is recorded in books, the impact of that transaction on the left and the right side of the equation should be equal. That is, any transaction that increases or decreases the assets of the business must increase or decrease its liabilities and or capital by an identical amount. Let us revisit the 5 examples that we discussed earlier to understand the impact of those examples on the accounting equation. The first example that was discussed earlier, and as you can see on your screen, was purchase of building for cash by a business for rupees 5 lakhs. In this example, we had concluded that the value of buildings in the books would increase while the total cash balance of the business would decrease post the transaction. As both building and cash are assets of a business, the net effect on total assets will not change as the business is merely exchanging one asset for another, that is exchanging cash for building. Hence, the left side of the accounting equation will remain unchanged. The right side of the equation will also remain unchanged as this transaction does not affect any of the liabilities or capital. In conclusion, accounting equation holds true for this transaction. In the second example, the transaction was salaries paid by way of cash rupees 10,000. In this transaction, as I explained earlier, salaries account will increase while cash account will decrease. Now, if the cash balance reduces, the asset side of the equation reduces by 10,000 rupees. What is the impact on the right side of the equation? Remember, any profit earned by the business gets added to the capital of the business as the profit of the business belongs to its owners. The increase in salary expense will reduce the profit of the business for the accounting period. Reduction in profit will in turn reduce the capital for the business. Therefore, on the right side of the accounting equation, capital will also reduce by rupees 10,000. In conclusion, both the right and the left side of the equation will reduce by rupees 10,000 post this transaction and the accounting equation would hold true. The third example is cash introduced by owner to the tune of rupees 50,000. Here both cash account and capital account would increase on account of the additional capital brought into the business. Therefore, on the left side of the accounting equation, asset will increase by rupees 50,000 indicating increase in cash. On the right side of the accounting equation, capital will also increase by rupees 50,000 indicating additional capital brought into the business. As the left side and the right side of the accounting equation increase by the same amount, that is rupees 50,000, the accounting equation will balance. So, in this case, there will be no impact on liabilities. The fourth example is cash received from customers A Limited and B Limited to the tune of rupees 7,000. A Limited and B Limited accounts are debtors which are assets. In this case, while cash balance increases when money is collected from debtors, the debtors balance would reduce as the debtors pay off the amount due from them. The impact of this transaction is that on the left hand side of the accounting equation, there will be no impact on total assets as increase in one asset, that is cash, is offset by decrease in another asset, that is debtors. On the right hand side, there is no impact as none of the liabilities or capital account would be affected by this transaction. So in conclusion, the left and the right side of the accounting equation will balance for this transaction. The last example is purchase of stationery on credit from XY Limited to the tune of Rs 2200. In this case, increase in stationery cost will lead to reduced profits, resulting in reduction in capital by Rs 2200. This is because any increase in cost will affect profits and the profits of the business accrue to the owners. This transaction will also lead to increase in liabilities as XY Limited's invoice or bill will be paid at some point in the future. Till such time the invoice is paid off, the amount due to XY Limited will be recorded in the books as liability. Therefore, on the right side of the accounting equation, the increase in liability for Rs 2200 will be offset by decrease in capital for the same amount. Hence, there is no impact on the right hand side of the accounting equation. This transaction does not affect the asset accounts and hence there would be no impact on the left hand side of the accounting equation. So what is important to note is that accounting equation should always balance for any transaction or event. If you find that the accounting equation does not balance for any transaction, kindly recheck your assumptions